Welcome back to the ETF Inspector. Happy Memorial Day weekend. It's Sunday, May 25th. And this will be the video for ULTY. Oh, didn't appear. There we go. Ultra Option Income Strategy Fund from YieldMax and LFGY, Crypto Industry and Tech Portfolio Option Income ETF. Today we'll be going over the week look ahead. We'll take a look at how far in or out of the money the options are sold for, as well as taking a look at how they did over the past week to come up with a guesstimate on what we think the distribution will be when it gets declared on Wednesday this week. Let's see, we'll start with ULTY. We don't have to go over any trades because we already did that on Friday's video. So for the most part, there were increases in the stock IVs, 30-day IVs, which the reason that matters to us is because that's the percentage that the fund try to pay out. Now, if they make more, great, but even when they don't, they try to pay out what would equate to the 30-day IV, the accumulated. So I have each stocks IV running down the side. I won't go over all of them, but obviously pretty high. Core Weave's one of the highest, 127%. Hims and Hers, 106%. Ion Q wasn't this high until it exploded this week, 121%. Oklo, another one that popped this week, 135%. Rigetti, 124%. But there's some low ones in there, 38% on Snowflake. So all in all, on the high end of the IVs, that's why they trade them, because there's lots of money to be made in premiums. So our weighted average, and so the way I came up with that, take all the IVs and then multiply them by how much of the money is in each stock. Right, so here's your weighting. So this is basically, let's call it AST, Space Mobile's market value divided by the combination of all the market values. Right, so they're 4%. We've got Ion Q's a 5%er, MicroStrategy's almost 5, Nvidia's almost 6. A couple more 5s with Oklo and Palantir. Over 5s on the two triple leveraged funds. So when that all multiplies out and adds up, it comes out to a 79.3% weighted average on our IV. So that's what we'll use, multiplying it by the closing price on Friday to come up with our IV portion of the estimate. We'll get to that in the second half, talking about ULTY. Okay, so for this week, C3.ai has 3,400 contracts for sold calls at $25.50 with the stock price at $22.72, leaving them 12.2% out of the money. With the majority of these funds, I think all of them are back to this now. It's a collar strategy, so they own the stock, they sell a call, and they buy a put to protect the stock that they have. We're not going to talk about the purchased put. That's just protection. They're making money off of the sold call. If they make money off the put, that's a bad day. That means the stock really dropped. So AST Space Mobile, they've got two different spots for their insurance policies, call them, but all their calls are sold at 4,750 contracts. Those are 7.9% out of the money. So I'll just back up a second. So obviously we want C3.ai to trade as high as possible while being under 25.50 by the close of the week. We want ASTS, same thing, as close to without breaking 26 as possible. Coinbase, 460 contracts, sold at the 275 strike price with the stock at 263. So those are 4.5% out of the money. If you're not familiar with our color coding, in the money, that'd be bad. That means it's going to cost us to close them out as red. Less than 5% out of the money, so it's in our favor, but it's getting close to being dangerous, is yellow, and more than 5% out of the money is green. If you've been watching, though, these stocks can move 20-30% at a time, so even 5% is not safe, but I had to come up with something, so there it is. Okay, CoreWeave, they've got two different calls, roughly, one twice the size of the other one. 800 contracts at 110 and 400 contracts at 112. Those are 7 and 9% out of the money, so we want the stock to trade under 110 for the week. Dell Technologies, 700 contracts all sold at the 120 strike price, 7% out of the money. First Solar, 450 contracts sold at 175. Those are more than 10% out of the money. So we've got plenty of room for upside. So the more they're out of the money, the less premium you're going to get. But the more they're out of the money, the more the overall fund can increase in value if the stocks go up, right? So as soon as the stocks go up past the point, hit the point or past the point where a call is sold, you're not making money anymore, because now for every penny it goes up past that is a penny more you got to pay to close out the option. So that's considered being capped. So it's nice. It's nice when we've got a lot of room to run, but at the same time, then you're collecting less premium. So it's a give and take. You decide what you want. Hims and Hers, 2,000 contracts sold at $61. Those are 11.25% out of the money. Robinhood, 2,170 contracts sold at 67. They're 6% out of the money. IonQ, they rolled these in the middle of that explosive day, so they're only 2.87% out of the money at 47. So I don't know where along the lines they made that roll to try to get themselves out of trouble. So at least they're out of the money. If you watched my other video, mine were sold at $31.50, so I'm just going to have to kiss those shares goodbye. Mara Holdings, or Mara, I don't know if I say that correctly. $16 call strike price, 6,250 contracts. Those are 8.6% out of the money. Marvell Technology, 10% out of the money on these 1,250 contracts at strike price of 67. MSTR has two, the larger one at 410, 275 contracts, and then 105 contracts at 420. They are nearly 11 and 13.6% out of the money. So we want it to stay under 410 for the majority of the money to be made. That's if it stays under 410, that's the way we make the potential maximum amount of money. NVIDIA, 1,300 contracts sold at 144. Those are just about 10% out of the money. Oklo, 2,999. I wish they would just buy 100 more shares so they could sell 3,000 contracts. They're 12% out of the money at 55. Palantir has 126, 130, and 131 are the call strike prices for the sales. So we want it to stay under 126. Those are 2, 5, and 6% out of the money. Reddit, 1,000 contracts at 107, 6% out of the money on those. Rigetti, they had already done these. This wasn't a move that they made Friday. They had previously made it, and it seems like they were okay with just letting it roll, hoping that that huge increase would pull back some. So they've got 3,500 contracts sold at $12 with the stock price at $14.02. They're 14.4% in the money. So we need those to come back down before Friday. And they rolled the rest of them, 3,000 contracts, to 15. They're 6.99% out of the money. RH Holdings, or RH, has 205 contracts at $195 strike. Those are 5.5% out of the money. SMCI, 1,350 contracts sold at $47. They're 17% out of the money. So we can afford a pretty good run in SMCI this week. Snowflake, 210 is the strike price on 450 contracts, just about 5% out of the money. Our triple leverage TNA, has 1,850 contracts at 30 and 1,800 contracts at 32.50. Those are 6.7 and 15.6% out of the money. The other triple leverage, TQQQ, 1,250, just about even, 1,250 to 1,200 at 72 and 73 strike prices. Those are 8.5 and 10% out of the money. Tesla has everything, 460 contracts at 355 call strike price. Those are 4.6. Just caught myself slipping. That's less than 5, so it's yellow. Upstart, split evenly between 47.50 and 48.50 on the sold calls. Those are 4.95 and 7.16% out of the money. And Vertiv Holdings Company, split evenly as well, 360 contracts each at 108 and 110, 3.7 and 5.6% out of the money. And finally, Vistra Corp, even split, 350 contracts each at 162.50 and 165. They are 2.7 and 4.3% out of the money. So overall, it looks like we're set up for a nice week with only one spot where we're in the money. Most are pretty far out of the money. There's a couple of 2%ers, but it looks like we can afford a pretty nice run, or we're going to, if stocks don't go up this week, we're going to get to collect a whole lot of that premium. There were 1.5 million shares added to the outstanding share count, so it's now at 54,750,000. All right, so without further ado, it was a rough week for them. Trading-wise, they lost almost every day. They had one good day on Tuesday where they made $405,000, but they lost every other day much more, for a total of $3.6 million in losses in options trading this week. So if you were just going to disperse that, they'd have to collect 6.63 cents from each of us. So we know that's not happening. If we combine the two, generally we do that sometimes because usually a bad trading week aligns with a good increase in share value, but for some reason we lost that one as well. So if we combine the two, it's even worse. They'd have to collect nearly 10 cents from each of us. That's not happening either. So if we use the IV, right, we talked about that at the beginning, the 79.3%, we multiply it by the stock price of 610, we come up with 9.3 cents per person. So my guess is about 9 cents because it was a loss. We lost in every way possible, right? The stock price itself lost throughout the week. The trading lost and the share values lost. So I think they're going to try and stay close to the IV, but maybe not give us the full amount. I mean, there's the potential. I almost put an 8 cent guess on there. So let me know what you think in the comments, if you think it's going to be more or less or whatever. So, okay, now let's take a look at LFGY. Same thing, right? Now in LFGY, every single stock 30-day IV increased. When I updated these, everyone was an increase. So we've got BitDeers at over 100%er, GameStop's over 100%. Those are the only two over 100. I think I saw a couple 90s, 98 on Hut 8 Corp, 92 on CleanSpark. But in any case, every single thing in here was an increase. So different strategy here. I believe there is nothing but calls in here. There are no puts. So they either just sell a call or they sell a call and then buy another call further out as their form of protection or insurance. Okay. For BitDeer, $15.50 and $16 are the two sold call strike prices, nearly even, 1,500-ish a piece. They're 7 and 10% out of the money. CleanSpark has all of them at 10, 5,100 contracts, 6.84% out of the money. I stand corrected. They also have 78 contracts sold at 12, but I mean, we're talking about change there at that point. They're 28% out of the money. Coinbase just has the calls sold, no insurance, 653 contracts, 7% out of the money with the 282.50. Core Scientific has the vast majority at 1150. They're 7% out of the money, with a smaller amount at 12 that are 12% out of the money. GameStop has 43 contracts sold at 32.50. They're in the money by 1%, but most of the money here is at 1,600 contracts at the 36.50 strike price. They're over 10% out of the money. Robinhood, 912 contracts at 68, 24 contracts at 71. Those are 7 and 12% out of the money. Hut 8 Corp, 3,368 contracts at 18.50. They are 11% out of the money. No contracts on IBIT. Mara Holdings just has the call, 5,800, almost 6,000, or almost 5,900 contracts, all at 16.50. They're 12% out of the money. And then the reason this looks funny is because MBTX, they don't actually own the shares. They only trade options. So they're just in alphabetical order here. They have calls sold at 260 out till June 20th. Every other option that I've talked about and will talk about are May 30th, this coming week, with the exception of this one and a June 20th down here for Opera. Okay, so those are only less than 1% out of the money. So it's going to be a stressful week trying to collect that $500,000. Mercado Libre, 2,600 is the strike price. So they were running above that all week and then had a rough day that dropped them down to 2,500. So they've got 21 contracts sold at that price. There's 3.68% out of the money. MSTR, again, 410 and 415. I think that was what we said on ULTY too. So I wonder if the fund managers talk between these on their strike prices they like, or if they even go to the individuals, right? If they go talk to Scott, who's running the MSTY, and get ideas for where the best strikes are. But those are nearly 11 and 12% out of the money. NU Holdings, 32 contracts at 12.50. They're 4% out of the money. And the majority, 3,600 contracts at 13. They're 8% out of the money. NVIDIA, 142 is the call strike price. There's 224 contracts, 8% out of the money. Opera, again, these were out till June. Not sure why we picked a couple to go that far out, unless they just don't have as many options within the the options trading. 2,625 contracts at $20 strike, 15% out of the money. PayPal, 72 is the strike for 461 contracts. Those are 3% out of the money. Riot, 950 is the strike, 5,592 contracts, 11% out of the money. Tesla, they've got 2 contracts sold there, but 161 contracts at 360, 2 at 372.50. Those are 6 and 9% out of the money. And finally, Block, XYZ, 12 contracts at 59. They're less than 0.5% out of the money. 432 contracts at 60. They're only 2% out of the money. So it's not quite as overall deep in the green, but for the most part, still looking good. Okay. They added 25,000 shares to come up to 2.9 million outstanding shares. Net assets of 114 million. So if you bought on Friday with that huge drop, you actually could have purchased at a discount. Basically, the NAV is $39.53 and the price closed at $39.45. So you were getting, generally, you usually are going to pay a penny to maybe a little bit more than the NAV. So if you got them at a discount, good for you. The weighted average of the 30-day IV on all these stocks is 68.58. So that'll help us with making our estimate. different story for sure. Talking about LFGY, they knocked it out of the park. So on trading, they made 500,000 on Monday, 42,000 on Tuesday, 115,000 on Wednesday, 1.3 million on Thursday, and 845,000 on Friday, for a grand total of $2.8 million made trading just within the fund just this past week. So if we divided that by the 2.9 million shares, comes out to 97, almost 98 cents a piece that they're going to pay us. Whew. If we combine the two, right, we took into account that we lost $2.7 million in share value over the course of the week. That would almost even it out, right? Making 2.8, losing 2.7. So obviously they're not going to pay us a 2-cent dividend. If we multiply the stock price that closed on Friday, right, $39.45, by the 0.6852 or 68.52% average IV, that comes out to 51.98. So I went back and forth a lot on this one because obviously the stock gave up a ton of money on Friday. If it hadn't, I think we would have been looking at a real nice distribution. So I could be wrong. I haven't been covering them long enough. I don't think they're going to pay us out the 97 cents with the way the stock lost, or the fund lost so much in stock price on Friday. Basically gave up everything for more than a week. But they did make 97 cents per share. So my guess is going to be 60. Tell me what you think. I'm definitely open to it. It could be higher. I almost went in the middle and went with like a 75-ish. So we'll see. And as we get more of these under our belt and I get to look at how they paid out in different situations, I'll be able to come up with a better guesstimate. But I think we're getting a better distribution than we've gotten in a couple weeks anyway. All right. So with that being said, that's the end of the video. So I'm going to give you the dad joke of the day. I thought this one was pretty funny. So thanks for watching. Thank you for everything. I get lots of comments and feedback and different criticisms. Nobody's been mean-spirited about it at all. Everybody's just trying to help. So I appreciate it. If you haven't already, please subscribe, like, share. Tell your friends that are into these funds or possibly looking to get into them. So, dad joke of the day. Did you know studies show that you shouldn't brush your teeth with your left hand? They say a toothbrush works much better. Okay. Have a good rest of your Memorial Day weekend. And the next ULTY LFGY video won't be out till Tuesday since there's no trading on Monday. Thank you. Goodbye.